Hello, David. I hope you are doing well today. As a student of years past, I see your knowledge and experience have expanded. Today, your teachings are on point, but your attitude is abrasive.
Abram, you are correct. David's knowledge of inventory planning and policies and procedures for businesses is strong. If you have not seen David's YouTube video, Inventory Control Equals More Profit, which equals more cash, you need to watch it.
You are correct, Aurora. Many business owners will place a high emphasis on sales, while one of the largest assets of a company goes unmanaged until it is a problem.
Efren, it is important to avoid stockouts. Stockouts will result in lost sales. How many times can you miss sales before you lose the customer?
David, I know an inventory control system would be helpful in my business. What inventory control system would you recommend for my manufacturing business?
When I look at your operation, Peter, I can see that you've done well over the years. I believe that an inventory control system is definitely needed, but it's going to help in two different ways. First, we want to take down the requirement for raw materials. Holding raw materials for a long period of time is a roller coaster of cash flow. You have to expend a lot of money and then you get it back over the time. The problem is you're receiving that money later than when you have to pay your bill. This is the reason why you're having to pull from your operating line of credit. In addition to is your days sales outstanding, DSO, is high compared to what your terms are. So that is the second problem. We need to try to take your days inventory outstanding from 75 days, and we want to try to get it down to 45 or 60 days. The second thing is we want to take the DSO, days sales outstanding, from 45 days, and we want to try to get it to 30 to 35 days. So then we're looking at an operating cycle of 75 to 95 days, which would be about a 17 to 33% decrease from the 120 days that you're at now.
Reducing the operating line of credit would reduce interest expense, which is good. What are the steps in accomplishing this?
This is a proud moment for me. The student becomes the professor.
There are several raw material items you purchase that will be on your floor for 75 to 90 days. That's too long.
True. We do this because of the supplier's price. Larger quantities provide a lower price.
Now, I have talked with one of your key suppliers, with your permission, of course, and they have agreed to these terms. Number one, they will continue to supply at the volume you have been purchasing. Instead of shipping all of it at one time, the supplier is going to provide 30-day supply increments. Now, you're making a commitment for 90 days, but you're going to be pulling it for every 30 days. The supplier has agreed, hold the product on their floor until you pull it each month.
Okay, David, what will be the cost impact on finished goods?
Yes, there will be a price increase, or there is a fee involved in all of this. The fee is going to be about a 2% increase in your price in raw materials. Since this supplier makes up 40% of your finished goods total cost, the price is only going to be 0.8% increase in your finished goods cost. This increase should be reduced by the savings you'll have in the operational line of credit.
I can see this is a good start, David. What about the days sales outstanding DSO? What can we do about lowering it?
Peter, I've made several notes while I was reviewing your accounts receivable aging report. There are many different small balances and credits on the different accounts that you have. For example, ABC Distribution Company has a small balance for the last 5 invoices. I reviewed the file and found a price adjustment that was not entered into the computer. Hence, the billing has been incorrect for the past 5 invoices. The customer receives the bill, they mark it correctly, and they pay what they feel is due. So, number one, all these small balances need to be either collected or, debit and credit memos need to be processed based on what needs to happen with that account. You have 6 payment terms that are very popular. 1% 10, net 15, 1% 10, net 30, 2% 10, net 15, 2% 10, net 30, net 15, and then net 30. So there's 6 different payment terms. However, if someone is on a 1% or 2% 10, net 15, they're usually paying in about 30 days and they're taking the discount at the same time. Whereas if they're on a 1%, 2%, 10, net 30, or just net 30, they're taking 45 days to pay on average, and they're still taking the discount. So not only are you losing cash, but it's taking them longer to pay. So that is an issue.
This is why our DSO is so high. True?
Yes, Peter, this is why.
How do I accomplish this task?
Peter, this is your company. I cannot tell you what to do, but I have a few ideas to get you started in the right direction. You can take my ideas and expand on them with your team, or you can throw them out. It's whatever you wish to decide. Step one, you need to get your sales team involved. The sales team needs to approach each account and let them know the payment situation is not acceptable. We need to get paid as we agreed upon. If it's 1% 10, net 30, then we need to get paid within 10 days and they can take the 1% discount. That does not mean they take a 1% discount, write the check on the 10th day, and don't mail it for a week. That is not what it means. Now, if they can't agree to these terms, then what terms can they agree to? What would they prefer? I would not back off any further than 10 days to get a cash discount. If they want to pay in net 45, then fine. Now, in turn, I would be adjusting their price upward because they're taking longer to pay, or have them pay up front, 50% up front and 50% on the back end, whatever it may be, whatever it can be negotiated that is reasonable. And being reasonable is both for you, Peter, and for your customer. Now, we also need to look at the pricing. The pricing is not correct. The salesman will put in for a price adjustment, but it's never entered into the computer and no one follows up to make sure it happens.
We want the customer pricing correct 100% of the time.
Having customer pricing 100% correct all the time is very reasonable. Number one, it will take less time to make corrections. You can get the money in the bank and have it applied to the account without hesitation. Going back and making these corrections will take a long time. It will take time. That means you have to spend more money to get things corrected.
David, thank you for your review. What would you recommend at this time?
First of all, we need to get a policy and procedure in place and make sure it works properly. Now, your sales team is receiving commission on the sales dollar. So whenever accounting is doing a debit or credit memo to get the pricing correct, the salesperson is not touched in any way in reference to this. Peter, I am not accusing anyone. I'm accusing everyone. My evidence is the AR aging report.
David, calm. Not so harsh.
Punishing anyone on the sales team would be unadvisable. Basically, you need to accept the blame for it because no one was watching after the store. But do place emphasis on change. Things are changing now. We are a business and we're going to act like it, plain and simple. These changes cannot happen overnight. This is not a sprint, it is a marathon. It will take time to implement these changes. It will take constant training, work, review, retraining, rework, review, so on and so forth. It will be a cycle until everyone is on the straight and narrow. But here, this is where you become the leader of your people. Peter, I would recommend that you get a business coach. Seriously, because you need help to stay on point that will keep you working forward with a solid plan. You know, Peter, I've always said no one plans to fail, only fails to plan. And with that in mind, setting out a plan that you can rally your managers around to get their people around it and go forward would be advisable. First, you're going to plan out your activities. One of the first things is policies and procedures. You've got to have policies and procedures in place to be successful. If you're not, you cannot scale at any rate. Everything becomes chaotic and everybody starts pointing fingers, and no one's there to take the blame or the responsibility. So, planning is a key factor in your success. Two, your inventory is a key factor in success. If you're not watching how things are being done, as you can see, they can break down quickly. In this case, it was purchasing wanting to get the lowest price without negotiating. I don't blame them. Making it easy to get somewhere is very reasonable. But we have to set forth expectations for your team so they will produce as you want them to. So, Peter, let's take a look at this and see where we can find you a business coach that can help you along the way to improve the efficiency of your operation.
David, the training you have done with Peter has been informative. What inventory control systems did you place into Peter's manufacturing business?
Team, we did actually cover several inventory control systems that Peter could put in his manufacturing business. The reduction of inventory purchased at one time allowed him to reduce his raw material inventory, reducing the possibility of spoilage with overstock. We talked about, since he was purchasing at a lower quantity, that means less space would be required to hold the raw materials. In turn, he was purchasing what he needed for every 30 days, not purchase 90 days. This would maximize his efficiencies within his warehouse and also in his facility because there would be a sense of scarcity. All of these items are covered under just in time. The last item that we all talked about was policies and procedures. Policies and procedures is the top item that will help companies progress into a new era. If you do not have systems, policies, and procedures in place, there is no way you can survive scaling your business. You may be able to grow your business, true, but if you do not have systematic policies and procedures of what to do that are automated systems, you cannot scale. And scale, I mean by 3 times, 4 times the volume.
David, when talking with Peter earlier about two different savings, reducing days sales outstanding, DSO, and days inventory outstanding, DIO,
you did not provide a savings analysis. Can you walk through this computation with us?
So, Aurora, thank you for reminding me to go over these formulas. The operating cycle calculation is knowing the days sales outstanding plus the days inventory outstanding. Those two added together provides operating cycle days. So what is the days sales outstanding? Well, we know that Peter's company does $15 million a year. They have a 55% gross profit on materials. We can take the sales times the invert to receive the cost of goods sold material. We know what the average accounts receivable is, and that comes up with 45 days sales outstanding. We know what the average inventory is. That provides us with the inventory turns. In turn, we're able to receive the days inventory outstanding. So 45 plus the 75 equals the 120. Now, when I was speaking with Peter, we were talking about what we could save. So what we're looking at is we want to get the day sales outstanding down to between 30 and 35. Now, with everything remaining the same on $15 million worth of sales at a 55% gross profit margin on materials, we look at the high side, which is 35 days sales outstanding. This would bring the receivables down to 1.438 million. In turn, those 10 days, 45 minus 35, would drop the receivables by $411,000. Now, taking the inventory from 75 days to 60 days would reduce the inventory by $277,300. This would provide $688,300 back into your cash flow. If we look at this at the lowest point of the receivables dropping down to 30 days sales outstanding, this would lower the receivables down to $1,232,800. The accounts receivable drop would be $616,500. Now, with the inventory going from 75 days to 45 days, the inventory would drop the inventory drop would be $554,700. Now, going from days in operating cycle of 120, which Peter is at right now, to 75 days in operating cycle would mean additional cash flow of $1,171,200. Now, in my opinion, it will be very difficult, or it will take a very long time to get down to 30 days sales outstanding. I believe 35 is more reasonable for Peter and his manufacturing business. However, going from 75 to 45 days in inventory is very reasonable and doable over a period of time, of course. So if you take $411,000 plus the $554,700, it's feasible for Peter to hit almost $1 million in cash flow savings. Peter had a operating line of credit that he was paying interest on. He would not have to use that line of credit anymore. Peter would be able to bring his cash back in-house to where he didn't have to rely on that operating line of credit. This is the calculation of how we go through it. I will have a link in the description that you'll be able to pull this Google Sheet very easily and be able to punch your numbers in. I have lined with what is input and what is calculation. You can always just put in the days and it will compute what your AR turns and your average AR. I've done that also for average inventory. Put in the days inventory outstanding. You'll provide the inventory turns and the average inventory. I will add a sheet to this document to be able to do it the other way. So you put in trailing 12-month sales. You'll put in the gross profit margin, actual average AR from the beginning of the 12 months to the ending. It will provide your AR turns and then your days sales outstanding. From there, you'll be able to put in this information to be able to come out with, what you want your average AR to be on a high side and a low side. And then also the same thing for your average inventory, your inventory turns and days inventory outstanding, putting in the information on the high side and the low side, coming up with your total days in operating cycle, and then also your savings.
From all us at creating a better version and
No one plans to fail. We appreciate you watching until the end.
Click the link in the description to get your free Google Sheet Days in Operating Cycle.
If you have found this video useful, smash the thumbs up button.
Subscribe to the channel and hit the bell to receive notifications when a new video is added.
Topics covered are inventory management, planning, and standard operating procedures, SOPs.